Time now for the morning trade, and that is Cisco, which is reporting earnings after the close. For a preview, very pleased to say, we'll welcome in Schwab Network's Marley Kayden now to give us a little bit of a snapshot as to what the street is expecting. Good morning to you, Marley.
Good morning, Sam. You know, Cisco has their earnings coming out after the close, like you just said. Expectations are high for Cisco. They've had a very strong year for the networking company. They're expected to report, this is their fiscal fourth quarter, so for Q4, expecting 97 cents a share on revenue of $14.6 billion. That would be an increase of 11% from last year's earnings and a 7% jump in revenue. Wall Street will be keeping a very close eye on growth, though, for Cisco's networking segment. That brings in the most revenue for the company and includes all of its gear used in AI data centers. So analysts expecting that to post an 8% uptick in networking revenue, up to $7.34 billion from the year ago period. Also, something they'll be listening for is any information on its Meraki cloud-managed networking solution. It secured FedRAMP authorization in Q3, so that opened the door for deeper federal market penetration. So likely some information from management on that in one way or another will be influential in how the stock performs. Investors will also be looking at the results to assess Cisco's trajectory for the coming months and to validate its recent stock momentum. You know, what happens could depend on what management says about the demand for equipment used in infrastructure for AI. They have strategic alliances with NVIDIA, Microsoft, G42, Saudi Arabia's Humane AI in building these AI data centers worldwide. So likely we'll hear a lot of analyst questions on the call about that, about the growth there and any new projects that are ongoing. Shares right now are up about 1%, just a little off the unchanged line, but in the positive territory right now at 71.19. So just off of their 52-week highs. They're up 57% in the past 12 months, though, which has handily outperformed the S&P 500 tech sector. They're only up about 29%. One potential risk, though, Sam, is the same risk that we talk about in most of the earnings. Tariffs, of course, the tariff impact. Enterprises could be forced to cut their budgets, or they could be forced to increase them less than they had originally planned as tariffs increase their cost, and there is still so much uncertainty there. So analysts seem to think this might make it difficult for Cisco to properly predict any of their guidance, and because of that, they may be what Evercore ISI calls prudently conservative in their guidance, just to risk having a miss. So it will be interesting to see how that plays out, what their guidance looks like, knowing it is the end of their fiscal year here, and so they'll be forecasting for the next year.
Yeah, absolutely. A high bar, as you say, and they've got to justify what has been, as you say, 57% rally over the year. I mean, pretty remarkable. And, you know, it's a high bar, I suppose, you know, a lot of pressure on a company like this, given that it's at the tail end of the earnings season. We've just heard from so many companies that, you know, even if you clear the bar, it really is the guidance that many have been paying attention to. Is there anything else that, you know, analysts are sort of pointing to as to what they're looking out to hear from this company, particularly because we've already heard from CoreWeave, which isn't doing too well in the market today. You know, everyone's looking at the network and the infrastructure as part of the broader AI ecosystem. So I'm just wondering what else you're hearing as we look ahead to this report card.
There is one interesting thing to note. You know, we've talked so much about the valuation story this earnings season and all the stretched valuations. Cisco's in a little bit of a different boat here. You know, Cisco's valuation is a key talking point in all of the analysts' note. They're right now trading just under 22 times forward adjusted earnings. That's below the industry average. So that is drawing some interest from investors who like a good discount, and certainly not something that we've seen consistently through this earnings season, as we've seen things trade at much higher multiples and much more expensive. So, you know, it will be interesting to see with their forward earnings trading that low and lower than the average, if that impacts how the shares respond and how investors respond to the news, because we've seen some punishment for positive results just because the valuations have been so stretched. It's less stretched here when it comes to Cisco.
Yeah, absolutely. That certainly has been a sort of running theme that we've seen. So it's really good that you highlight the valuation part of the story, as well as to how it differentiates itself from the rest of the pack. Marley Kayden, thank you so much for getting us across to Cisco this morning. Really appreciate your time. Let's trade it now with Joe Tigay, who is the portfolio manager of the Rational Equity Armor Fund. How are you approaching the example trade, Joe?
Yeah, thank you very much for having me. Just watching this AI narrative continue to play out, the earnings have been, maybe you could call it a mixed bag, but I think they've been mostly good across the tech sector. And one thing that has been consistent is that companies continue to say they are continuing to spend on AI. They're continuing to spend on data center build out. And Cisco, of course, we know is at the center of that. So I'm expecting another good quarter for them and hopefully upping their guidance. That is going to, of course, going to be the crucial component. How are they going to do in the fourth quarter and in 2026? That will be very important for me. Now, all that said, it's obviously there's a lot of volatility in this space. Miss in guidance would cause a big turnaround. We know they've had a fantastic year-over-year return. We're talking about 60% return. So I'm just approaching this cautiously as an example trade rather than owning it. I'd like to get into it via owning a December call. Right now, that's approximately $4, $4.05 this morning, maybe a little lower right now as we're under pressure this morning. So just looking at this option strike, it gets me in the name. I have a defined risk. I'm hoping for a better than expected earnings result. If I do get that, I can close out this call or sell an upside call, collect some of that premium back.
Okay, and as Marley was saying, a bit of a high bar for this one, not to mention where it's sort of reporting in the earnings season. We've heard from so many companies so far. Also, the fact that it's got to sort of justify this run-up 50% rally over the year. But I'm sure you caught her commentary around what people are thinking about the valuation here too. What are your thoughts?
Yeah, I think it's very interesting. Maybe they're not so sure about the acquisition of Splunk, if that's going to be, going to take a few quarters to really filter in. But I'm excited about that. I think, two things that we've not heard companies not worried about is that they don't need more AI infrastructure spending. Yes, we've seen a lot of infrastructure spending. We're continuing to do that across the board. So every company, every big tech company is continuing to expand their infrastructure, continuing to expand in the data center world. And everybody has consistently said that we haven't solved the cybersecurity problem. It's not going away. In fact, it's only going to get worse. We have to continue to be one step ahead of the cybersecurity. Having that integrated into your system, which is what Cisco does so well, having it on their servers is really crucial. I think it's kind of given them a moat here in this future that they have the hardware integrated with the security all in one band. So it really is going to be crucial for them. And I'm curious to see what that looks like going forward. So yes, it is an exciting company. Do have a moat. It's why they've had the tremendous returns they've had. I think it still is very cheap, but we'll have to see how the earnings play out.
Be watching after the bell today, and as you mentioned, I mean, cybersecurity, it just feels like it's not optional. I mean, the IT spend and the budgets are there. Perhaps a few macroeconomic challenges with some of those enterprises, but we know that the commitment is there. All right, that's a good look at Cisco. Just wondering what your overall thoughts on the markets were today. We continue to hit record highs here, no doubt building on that CPI-induced rally. The next cab off the rank and catalyst is going to be the PPI. How are you looking at things?
Yeah, it's been a fantastic couple of weeks. We had that little hiccup at the start of August. A tremendous run for equities, again being led by the mega cap, going to all-time highs. Just look at that Mag 7 index, just absolutely blasting off, going hyperbolic. Now, I will caution, though, we are seasonally coming up to a very harsh time for the market. September is the most volatile month of the year, maybe surprisingly so, but it is a month where we see volatility return to form. We have very low volatility of the VIX in the 15 range. When the volatility gets on the lower end of the range, it's kind of like an accumulation period for me, expecting that return to the mean for volatility, which it tends to do, and especially heading into September. That's something I'm watching very carefully now. If you've just been paying attention this year, for an example, it just seems like every time things seem too good, they are too good. We get some sort of a pullback. So we've been marching higher. We've been doing great. But it's been a 2 steps forward, 1 step backwards rally. And I think we should be expecting that. Right now, things seem very good. There's probably something around the corner we're not thinking about that's going to knock us down a peg. And I think we should be accepting that as we continue higher.
Yeah, what goes up must come down, as they say. It's interesting, the VIX are sub 15 actually, and some saying that it's screaming complacency. But to your point, Joe, I mean, some have been sort of suggesting that perhaps we are due for a bit of a correction and a pullback. So let's wait and see. But as I mentioned, all eyes really on the inflation picture at the moment. Joe Tigay, Rational Equity Armor Fund, really appreciate your time. Thank you so much for joining us.